G'day traders, welcome to your daily market update for Tuesday, May 26th. It is really the start of the trading week, as yesterday we did have a host of public holidays. The market was very quiet, quite range bound, and there wasn't a lot of activity as a result. So we have kick-started this trading session with some New Zealand data. You can see here the trade balance did improve, and we've only seen very slight misses in the imports-exports. So overall, not a bad result for the New Zealand economy. And we will move into the week, and we have a host of US data, as you can see, coming out today. We don't have a lot in the European time frame, so the market will be back focused on the US dollar. Now, the US dollar has seen a big move higher since Friday, and that is a result of a very impressive CPI reading, followed by some very positive comments from Janet Yellen suggesting that we will get an interest rate rise in 2015. Now, the market will take that on board and continue to show signs of strength for the US dollar, I believe. And if we continue to see some strong data coming out of the US, well, then that strength will only continue to resume, as the market will start to look at pricing in the possibility of an interest rate rise in September or at some stage this year. As we move later on and get closer to the September date, depending on how the Fed indicate and plan to roll out the interest rate rise, will determine how the price action will follow between now and then. So I suggest everyone keeps a keen interest and eye on the data coming out of the US, as well as any comments from such Fed members and Janet Yellen and any other policy meeting, as the market will be reacting to the firming up of confirmation and the interest rate rise at some stage this year. So the closer we get and the more positive the market becomes, the higher the US dollar will rally. So for today, it's all about the US dollar. Let's go over and have a look at the US dollar chart. And as you can see, the rebound here has been quite impressive. Friday, we did push through a resistance level, and we have continued for the last two trading days higher. And right now we are definitely seeing the momentum carry through. The next major resistance level is at 98.5, and we have support down here at 94.8. So for now, we are seeing the market bid the US dollar, and the other pairs as a result are being affected. As you can see here on the New Zealand versus the US daily chart, we have seen a pretty big sell-off. We did get a bounce here on the back of the fears from the US dollar. And since then, we have seen nothing but strength from the US dollar, and we have seen the New Zealand economy not deliver the results that everybody has come to expect. However, today's trade balance has allowed for a little bit of a bounce, as you can see here, and any support would be at 73 cents. If that is broken, we should move up to the downside, back down here to the March and January lows, and I think that they could be tested in the near term. The Australian dollar has also been under significant pressure. We have seen some large falls in recent months, and you can see that we did have a small corrective rally, but that has since stalled, and you've seen a consecutive day of losses, and that is only set to continue with the US dollar strength, and we will see how things pan out for the week. But the next major support is at 77 cents, and the next major resistance is 79 cents. The Great British Pound has fallen back to test the 200-day moving average that it has bounced off once before on the uptrend line, and has now sequentially fallen dramatically as a result of the Friday's data from the US. We haven't done much since then, and right now we are just drifting a little bit lower. So the market is going to come down and test the 200-day moving average by the looks of it, and all the technical traders out there will be keeping a keen interest on whether this can hold up as support or whether it fails and the market looks like moving lower. The euro has broken through an uptrend line. We have also broken through the $1.10 level, and we are now tracking towards $1.09. The momentum has certainly lost its steam here on this corrective rally. It lost it at this downtrend line, so you could definitely call this just a corrective move in an otherwise longer-term downtrend. And as the market continues to discuss and play out around Greece, I think that the pressures will remain to the downside unless Greece and the EU do come up with an agreement at some stage in the next few days to weeks. The time is getting close when a decision does need to be made, as Greece is running out of money. So I think that we are getting to the pointy end of the situation, and we could start to see some volatility in this pair. Perhaps if we do get a deal, we will see a bounce in the relief rally in the euro. The US dollar versus the Canadian dollar has seen strength on the back of the US dollar, and we've also seen oil come off just a little bit, and that has allowed for the pair to continue to grind higher. It is now testing the historical resistance level that was support for such a long time from January through to April, and a break above that would definitely signify a big, strong move. And that would counter the bottom that we have seen here at $1.19 would be pretty safe. But for now, $1.23.5 is acting as resistance, and we'll see if we can push through. Keep an eye on oil for those of you who are trading this chart. And the US dollar versus the Japanese yen has broken out of this triangle, but we are still within the bounds of the range. From the March highs are looks like they're going to be tested, and if we can clear above that and sustainably close, have a daily close above that 122 level, I think that would poise well for the market and be a sign that the breakout has initiated, and we could be expecting some higher moves on the back of the market pricing in an interest rate rise. Well, that's it from me today. Keep an eye on the markets. It is the real start of the trading week, and I hope you all trade well. And I think things will become more lively in the US session. I'll be back again tomorrow. So until then, trade well.